The increasing influence of insurance coverage. So many people now seek therapy that private insurance companies have changed their coverage for mental health patients. Today, the dominant form of coverage is the Managed Care Program, a program in which the insurance company determines such key issues as which therapists its clients may choose, the cost of sessions, and the number of sessions for which a client may be reimbursed. At least 75% of all privately insured persons in the United States are currently enrolled in managed care programs. The coverage for mental health treatment under such programs follows the same basic principles as coverage for medical treatment, including a limited pool of practitioners from which patients can choose, pre-approval of treatment by the insurance company, strict standards for judging whether problems and treatments qualify for reimbursement, and ongoing reviews and assessments. In the mental health realm, both therapists and clients typically dislike managed care programs. They fear that the programs inevitably shorten therapy, often for the worse, unfairly favor treatments whose results are not always lasting, for example, drug therapy, pose a special hardship for those with severe mental disorders, and result in treatments determined by insurance companies rather than by therapists. A key problem with insurance coverage, both managed care and other kinds of insurance programs, is that reimbursements for mental disorders tend to be lower than those for medical disorders. This places persons with psychological difficulties at a distinct disadvantage. In 2008, the U.S. Congress passed a federal parity law that directed insurance companies to provide equal coverage for mental and medical problems. However, a number of insurance companies found ways around that law and continued to deny or limit payments for mental health treatments. Thus, in 2013, the Departments of Health and Human Services, Labor, and Treasury jointly issued a federal regulation that defined the principles of parity more clearly. And in 2014, the mental health provisions of the Affordable Care Act, referred to colloquially as Obamacare, went into effect and extended the reach of the 2013 regulations still further. For example, the ACA designates mental health care as one of 10 types of essential health benefits that must be provided by all insurers. It also requires all health plans to provide preventive mental health services at no additional cost, for example, free screenings for depressive disorders, and to allow new and continued membership to individuals who have pre-existing mental conditions. Although such changes have heartened mental health advocates, it is not yet clear whether such provisions will in fact result in significantly better treatment for people with psychological problems. An ounce of prevention. The clinical field's growing emphasis on prevention has affected how employers address the problem of stress in the workplace. About 20% of corporate employers now offer some kind of stress reduction program, such as this regular yoga class at Armani, the fashion company, in New York City. Corporate spending has helped fuel the $12 billion stress management industry.